And welcome everybody, this is FXPassion broadcasting you live on YouTube. Isaac, how are you Isaac? How are you? Let me see the platform. Sorry for the delay everybody, we are 3 minutes late. I was trading the CAD news. Hello Miguel. Back to the original plan. We are going to meet after the webinar, okay? I sent an email to Dukas Copy to change my webinar today, but I was late, you know. I mean, I sent them the wrong date. Alessandro, hello, how are you? And EuroCAD, we are trading EuroCAD. Today is the news Euro Japan, EuroCAD. Let me check EuroCAD. Daily chart, NZD CAD, all the CAD pairs, right? NZD CAD, it's out of the range right now. And EuroCAD 1 hour, What is this everybody? What is this candle? And this chart is a mess, right? So we need to clean up the chart. What is this candle everybody? We are learning candlestick formations. Miguel, can we meet on Skype after the webinar? Or would you prefer to meet at 6 p.m. your time? I was late, you know. I wanted to have the webinar at 4 p.m. GMT. But I messed with the dates first. Okay, highs and lows, stop loss. So, big stop loss. Engulfing bullish at the end of the webinar. Okay, great. But today we are going to address bearish candlestick formations. So let's try to find out. This is the news. EuroCAD is bullish, NZD CAD is bullish. USD CAD. Who was trading USD CAD yesterday? USD CAD. I don't remember if it was Maxine or somebody else asking about USD CAD. Bearish candlestick formations today. So the market hit our price level of EuroCAD. We are out. And let's check USD CAD. We need to address bearish, right? So close Euro JPY, close EuroCAD, USD CAD daily chart. USD CAD. NZD CAD. Where is NZD CAD? NZD CAD is up. USD CAD is up. And EuroCAD is up. This means what? That the news was bad for the Canadian dollar, right? Okay. So what is falling? Canada JPY. Canada JPY should fall. And there you go. Canada JPY. Canada JPY is falling, right? And we have a up trendline break, right? Let's color code this in black. Up trendline break. And let's see what's happening. This is Canada JPY daily chart. Let's compress the chart first. This is not the easiest pair to trade for the beginner trader. So we have an up structure and we have a down structure. Lower low, lower high, lower low, lower high, lower low, lower high, lower low. Then we have an up structure. High, higher low, higher high, higher low, higher high, higher low, and then we have a down structure. Lower high, lower low, lower high, lower low. So talking about bearish candlestick formations today, as we said, in a downtrend, right, we are going to sell bearish candlestick formations when the down retracement is over, and we are going to sell together with the counter trendline break. So this would be the case, right? This is a down trend line. We have the market making lower lows, lower highs structure. So this is the downtrend line, Canada JPY daily chart, right? And the market was in an up, no, in a down retracement. So most likely all of these higher highs, higher lows, higher highs, higher lows, this was a down retracement, and most likely the market is going to make a lower low if nothing changes fundamentally, of course. But this is the right time to enter a bearish candlestick formation, right? And this one here, right? It was too soon, but as soon as the market broke the uptrend line, and today right now with the news announcement, right, we can show this. And of course the market is going to wave, right? It's going to fall, and then it's going to retrace, and then it's going to fall, and then it's going to retrace again, and then it's going to fall if nothing changes. And what we are going to do, we are going to sell every time the market retraces. We are going to sell bearish candlestick formations. Now, similarly to yesterday, let me find the bullish bearish, not this one, let me see, bearish candlestick formations. There you go. Let's open the chart, daily chart, back again. Daily chart. Okay everybody, so similarly to yesterday, we have these bearish candlestick formations, and don't bother with the name, the bearish shooting star, the bearish evening star, the bearish engulfing candle, right? The bearish dark cloud cover, and the bearish tweezer top. So what is important with the bearish candlestick formations, similarly to the bullish, you need to understand the wicks of the candle, and it's the same as yesterday, just in the opposite direction. The wick has two stages, right? Two phases. Number one is the battle between the bulls and the bears, and number two is the decision, right? So on Canada JPY, what was the first bearish candlestick formation? It was some kind of the bearish shooting star, right? Maybe the bearish engulfing candle, but because of the wick, the big wick on the upside, this is the bearish shooting star. Of course, on the cheat sheet, this is theory. The market performs the bearish candlestick formations slightly different. Okay. Question for you everybody online. What is the rule of trading the bearish candlestick formation? If you entered selling this bearish candle, did you or did you not break the rules? As a beginner trader, if you entered selling the first bearish candlestick formation, did you or did you not break the rules? What do you think, everybody? Red arrow is pointing at the bearish candle. If you entered selling the first bearish candlestick formation, did you or did you not break the rules? And don't be shy, there is no right or wrong. Remember the trading rules. You should sell bearish candlestick formations when the retracement is over, right? So Passion, but you said yesterday that it doesn't matter if you put your stop loss in the right place. Yes, if you have enough capital, but if you entered selling here, bearish candlestick formation here, right? Bearish candlestick formation here, the market was still retracing, right? And bearish candlestick formation here. So of course, similarly to yesterday, just in the opposite direction, if this is the down structure and if you have enough capital to put your stop loss up here, and Alessandro is saying wait for previous structure low to break. Yes, this is the way to go. We can consider the retracement over, don't we? What do you mean, Miguel? We can consider the retracement over. Oh yes, yes, yes. We are going to consider the retracement over when, this is what we learned in January, everybody, trends, right? We are in an uptrend, the market is making higher highs, higher lows, and in some point in time the market is going to change direction. And Miguel is asking, can we consider the retracement over? The retracement isn't over until it makes a lower low, lower high, and another lower low. Only then the retracement is over. So on Canada JPY daily chart, what do we have right now? We have the first high, and the first lower low is forming, Miguel. The first lower low is forming, so we cannot say that the retracement is over because the market is unpredictable, right? The market can shoot up for no reason, especially for on Friday we have the non-farm payrolls. You know, they're going to show a number and the market is going to react, and then somebody from the government is going to come and say, oh, we have revisions, we have a revision. This news was not so bad, in reality it's quite good. So the market is going to move in seconds in the opposite direction. Or some governmental official is going to come and going to say, oh, we have revisions, the news is not so good, the news is bad. And again, the market in seconds is going to change direction. So if you're a beginner trader, everybody, be patient and follow the rules. Okay? So the answer to Miguel is no, we cannot consider the retracement over. Not yet. Not yet. We need the market to form a lower low, which is somewhere in here. Then the market is going to retrace, is going to form a lower high if it's going to fall, and on the next step he's going to form another lower low. I don't have the crystal ball, everybody, I'm just projecting what is going to happen if the market is going to fall. So if the market is going to fall, the market is going to do a lower low, then it's going to retrace, it's going to make a lower high, and then it's going to fall again, making another lower low. Only then this down retracement, as Miguel is saying, is going to be over. Do you understand this, everybody? Do you understand this? Why the retracement is not considered over? Not officially. Sometimes Sometimes the market is making higher highs, higher lows, higher highs, higher lows, right? It breaks the uptrend line, making a lower low, maybe a lower high, but then it continues its way up. So those are the rules. And you need to learn the rules, everybody, when you cannot consider a retracement to be over. Thank you, Miguel, for your question. Tell me you understand this, everybody. How to identify retracements and when you can say that the retracement is over. And of course we have a trader asking, well, if the retracement is not over, why are we trading this? Great question, everybody. If you don't see the question, I have other two platforms streaming. Great question. What do you think? Why are we trading this uptrend line break if the down retracement is not officially over? And the answer is, there is no right or wrong. Let's clean up the chart. Great question, great question. There is no right or wrong, everybody. We talked about entries in the trading week, right? So we took this opportunity with the news announcement, and also the market, together with the bearish candlestick formation, broke the uptrend line, right? So those are the reasons to go short. Number one, bearish candlestick formation. Number two, CTB counter trend line break. Okay, reasons to go short: BCF bearish candlestick formation, CTB counter trend line break, right? But you are right, you're asking, why are we in already if we don't have a confirmed downtrend? So you have two types of traders, right? Trader number one is a little bit riskier. Trader number two wants to be a little bit more secure. So there is no right or wrong, okay? And we are going to put like this, edit label, reason to go short: risky trader. Risky trader, we're talking about reasons, right? Risky trader. And reasons to go short for the secure, even though there are no guarantees: bullish bearish candlestick formation, counter trend and break, confirmed downtrend, need to see two lower highs. Great question. Lower highs and two lower lows. We are going to learn about crowns in the coming months. So you have two traders. Number one is the so-called risky trader, and he entered because of the bearish candlestick formations and the counter trend and break. The reasons to go short for the so-called secure trader, no guarantees whatsoever, are the same: bearish candlestick formations, counter trend and break, but confirmed downtrend. So the secure trader, if this is the graphic illustration here, and this is the uptrend line break, the secure trader is going to enter only at the third swing, everybody. Great question, right? Great question. So the secure trader is going to enter only on the third swing. He's going to patiently wait. He's going to patiently wait for the market to confirm the downtrend. He's going to patiently wait to see two lower lows and two lower highs, and he's going to enter on the third leg, on third swing, on the second retracement. Okay, so let's check another currency pair. Is USD JPY. USD JPY on the daily chart, and let's see what's happening, because Friday is coming. USD JPY, this is the daily chart. Structure up, then structure was down. Weekly chart. If you cannot read structure, everybody go to the higher time frame. Now structure is much easier to spot. So structure, high, low, if you want. High, low, high, lower low, lower high, lower low, lower high. We are in a down structure so far. Not so sure about this one, because we have indecision here. Pennant. What if I can change structure? Let me think. What if I'm going to change structure? Let's color code in black. What if I can change structure? Low, and high. So this means that we would be still in an up structure, right? And if you cannot read the weekly chart, we go on the monthly chart. Monthly chart, no doubts. No doubts on the monthly chart. Low, high, low, high, low. Low, no, we don't have a low. We don't have a low, so this is the high. Okay. Answer, we are in a down structure so far. We are in a down structure. Right? So I'm going to delete the black one. It's wrong. The red one is correct. We are in a down structure so far. But as you can see, the market is locked in this pennant. And this means undecision. Making lower lows but higher highs. Lower lows again. It's undecision. So how are we going to trade this one? Well, number one, let's put 1 plus 1 together. If you are a beginner trader, okay, and if you don't see a clear trend, or an uptrend, or a downtrend, or a clear sideways channel, stay out of the market. If you are a complete beginner trader trading for 3 months, 6 months, a year, if you don't see a clear trend, stay out of the market. Now, if you have a little bit more experience, right, and you have a pennant like this one, and the market is making higher lows but lower highs, right? Well, what you can do, and these webinars are not trading advice, just education, you can do two things. Both are risky, everybody. You can sell bearish candlestick formation, bearish candlestick formations near the upper band, and you can buy bullish candlestick formations near the lower band together with the counter trend line break. And this is risky trading. Okay, this is risky trading. Why? Because sooner or later the market is going to break one or the other. Sooner or later the market is going to break or the upper band or is going to break the lower band. And this is risky because you could enter buying bullish candlestick formations down here, red arrow, or you could be selling bearish candlestick formations up here, and the market would stop you out. The market would break this pennant, and you would get angry and frustrated and said, oh, this bullish bearish stuff doesn't work. You know, the bullish and the bearish candlestick formations, they don't work, and FXPassion doesn't know what he's saying. This is risky trading, everybody. So this is one type of market behavior. If you're a complete beginner trader, stay out. Okay, yes, you can find trends on the smaller time frame. Of course, if this is USD JPY weekly chart, right, we go on the smaller time frame and we can trade on the smaller time frame. This was an uptrend on the 1 hour, 2 hour chart, and then it reversed. It was a downtrend on the 1, 2 hour chart, right, and then it reversed. So let's check 1 hour chart, right? See? But you need to be aware as a beginner trader, even though you would trade this one, right, you need to be aware where is the upper band, because you cannot buy, I mean you can, but it would be risky to buy bullish candlestick formations up here. Okay, and we need to find bearish candlestick formations, right? Everybody, if this is the pennant, if this is the pennant line up here, is or is not risky? Oh, Passion, but the trend continues. Even though the trend continues, what do you think? Is or is not risky to continue to buy bullish candlestick formations up here? What do you think? Look what happened. Look the weekly chart. What happened when the market, and just maybe we are in a sideways channel, right? Just maybe. Let's clone this. Just maybe we are locked in a sideways channel, right? So if this is the sideways channel, then the trading it gets a little bit easier, because we are going to short bearish candlestick formations near the upper band. Okay, I'm going to clean up the chart a little bit. Okay, just maybe, everybody, just maybe we are locked in this sideways channel, and we had here 1, 2, 3, 4, 1, 2, 3, and no guarantees for the future, 4, 5 together. 5 times the market reached this level and reversed. So what we are going to do, we are going to wait, independently of the news announcement on Friday. We are going to wait for the market to go until the upper band, USD JPY, weekly chart, daily chart, it's all the same. And together, let's move on the daily. Together on the daily chart, we are going to wait for the bearish candlesticks formations, and we are going to sell, right? And if you're a beginner trader, look at this. If you sold the first counter trendline break, what are we telling you? Don't panic, because the market is going to retest the bearish candlestick formations 80% of the time, right? So the market was bouncing down and up and down and up and down and up until it finally decided to fall, right? In the meantime, don't panic. Believe in your education, everybody. Believe in your education and stay strong. Don't doubt. Okay? So if we are going to wait for this market to come to the upper band, and we are going to wait for a bearish candlestick formation, we are going to put our stop above the bearish candlestick formation. Passion, but you said that the stop should be above the structure. Yes, sir. Yes, sir. Yes, sir. So in an uptrend, when you are buying, right, bullish candlestick formations, this is structure. In a downtrend, when you sell bearish candlestick formations, this is structure, right? This one even better. In a sideways channel, when you are buying or when you are selling bearish, in this example we are going to sell bearish candlestick formations, we are going to put stop loss above the highs, right? Because this is structure, right? So we're going to wait for the market to retrace up. Passion, what is going to happen if the market breaks the uptrend line? Well, we are going to do one or two things. If the news announcement, this goes back to Miguel's question. Can we consider the retracement over? So if the non-farm payroll on Friday is going to make the USD JPY fall and take out the most recent low, then we are going to wait for the market to form another lower high and another lower low, and only then we are going to short. Why is that? Because the inclination of this currency pair is to go up, everybody, until the upper band. I don't know, we don't have a crystal ball, but most likely, even we see some retracement on the downside, right, we are going to wait for the third swing, the third leg, and we are going to short only then the market. Of course, we are going to address the risk and reward, right? If we don't see a lower low on Friday, even the market is going to break the uptrend line like this, and if we don't see a lower low, we are going to enter long on this trade. Passion, but it would break the uptrend line. Yes, but the trend line break is not enough. The trend line break is not enough. We see this all the time, even talking about structure, right? If this is structure and you think, oh, structure is the base of everything, which it is, right? And even though the market sometimes break the trend line, uptrend line or downtrend line, it does not break the structure. So the structure low is still in place, it's a higher low. And sometimes the market breaks the uptrend line or the downtrend line and it goes back, doing its thing. And in this case, you just need to adjust your uptrend line. Okay, everybody, so uptrend line and downtrend line break, it's not enough. We need to wait, as Miguel asked, for the retracement to be over, for the retracement to be confirmed. Right? Now, talking about bearish candlestick formations, let's go on NZD-CAD. NZD-CAD daily chart. NZD-CAD daily chart. I don't know. Oh, I'm in a trade. Okay, doesn't matter, it's a demo account. So this is the daily chart, NZD-CAD, and we have what? We are in a down structure. Lower lows, lower highs, lower lows, lower highs, lower lows, lower highs. So how are we going to win this? We are going to sell bearish candlestick formations when the downtrend appears, right? So if you traded this one, we traded this one before, if you would trade this one with the uptrend line break, right? What do we have here? We have here a bearish engulfing candle, and we have here a dark cloud cover, and we have here before again bearish engulfing candle. We have a bearish shooting star in here, and don't bother with the names, okay? So those are all indications to go short on NZD-CAD. And what happened? We are in this sideways channel, sideways movement, right? And the market is touching the upper band. Well, we are going to short again. When the market is going to form a bearish candlestick formation, we are going to short the market on the smaller time frame, not the daily, but we are going to short the market on the 2-hour chart, on the 1-hour chart, right? If this is the sideways channel, sideways movement that we are talking about, right? And of course, everybody, question for you: if the market is going to make higher highs, higher lows, higher highs on the 1-hour, 2-hour chart, when it's the right time to go short, everybody? Because the market can make a bearish candlestick formation here, and you could sell this bearish candlestick formation, and the market can go further up and you would sell this bearish candlestick formation, right? Because we are in a down structure, right? So if this happens, as a beginner trader, you need to be aware when is the right time to go short. And somebody is asking to repeat from yesterday. Okay, no problem. In the opposite direction, right? This is the downtrend. If you are selling, let's color this in red. If you are selling bearish candlestick formations, and if you are selling at the wrong time, let's say first trade I was wrong, the market went up. Second trade I was wrong, not about the bias, but about my timing. And the fourth trade I was wrong. And finally, if the structure needs to continue, is going to find the relevant bearish candlestick formation and then is going to fall. So again, this is good news for the beginner trader. If you can put your stop loss above the structure high in a structure downtrend. Yeah, I know, it's a lot of informations. If you can put your stop loss above the structure high, then you should be safe, right? So because of the news announcement, we are going to wait on the daily chart. On the daily chart, we are going to wait for bearish candlestick formations in here somewhere, because we are still locked in this sideways channel, sideways movement. And structure high is up here, right? What does this mean to the beginner trader? Well, it's quite easy. If the market, for some reason, I mean the reason is the news announcement, if the market is going to rally on the smaller time frame, if you enter at the wrong time, if you can put your stop loss above here, you should be safe. Passion, how can you be sure? Well, there are no guarantees in the market, but if you compress the chart, everybody, if you compress the chart, you can find structure. Structure high, structure low, structure high, structure low, structure high, structure low. This is structure. And after a structure high, what must? It's a must. I talked this morning to some students and they were, oh, but this theory, this is not theory, everybody, this is fact. The market, in order to wave, it must make structure high, structure low. The market, in order to establish a trend, it must make structure and trend high, trend low, right? So of course there are no guarantees. Where is the risk? Well, the risk is the market can break this structure high and can go further up, but it cannot break this structure high. Why not? Because if the market breaks this structure high, what is going to signal? A higher high and potential reversal of the trend. Okay? Yeah, I know, a lot of informations. Any questions so far, everybody? Any questions about how we are going to trade NZD CAD with the bearish candlestick formations? And how we are going to trade USD JPY with the bearish candlestick formations? Any questions so far? This is on the 1 hour chart, USD JPY, right? Passion, would you go long on USD JPY? Well, yes, we still have some space, right? If this is the 1 hour chart, and if this is going to be on Friday, the counter trend line break, well, yes, we still have some space, technically speaking, to go up. But as soon as we get to the, and let's go on the weekly, as soon as we get to the pennant, we are not going long anymore. I don't care about the Fibonacci's, I don't care about the Elliott waves, I don't care the Ichimoku. When we get up here, listen to me very carefully. If you are a beginner trader, when we get up here, I don't care what you have on your chart, the Ichimoku, the stochastic, the RSI, MACD, the super trading system from JP Morgan. If you are entering long up here, you are taking a risky trade. Do we agree on that? Oh, Passion, but what if you're wrong? Well, of course I could be wrong. Of course the market can do anything it wants. Of course, right? But we are here to learn how to trade and why. So if I'm not going to enter this trade long, and if I'm wrong, and if you're going to question me, oh, why didn't we enter long? Well, look at the pennant, right? And if you don't believe in the pennant, look at the sideways movement. And this is my technical reason not to go up, not to go long at the upper band, right? Of course I can be wrong. Of course we don't have the crystal ball, but if the market is going to break the upper band on the weekly, on the daily, start making higher highs, higher lows, if the market is going to show me some kind of structure, then I'm start buying. I'm going to go long. But before that, I'm not entering, because so far the market tried to break the upper band 7 times and it retraced, changed directions. Yes, you're right. Past behavior in the forex market is not guarantee for the future behavior. Yes, sir. Yes, sir. Absolutely. Right? So we are going back and forth with the concept the higher time frame controls the smaller time frame. Everybody, don't trade just from the 1 hour chart. Okay? Don't trade just from the 1 hour chart. Look what's happening. What is happening? See? If you entered buying this candle right now, you entered a risky trade. Oh, but this candle was bullish. No, this candle was not bullish. This candle is on the 1 hour time frame and it's in the process of making. So at 4 p.m. GMT, we are going to see what is this one. This is phase number 1. Bulls and the bears are fighting for control. And at 4 p.m. GMT, we are going to see the decision. If the body of the candle is going to be blue or black, it depends on the colors. If you have here, if the candle is going to close bearish, wait for the counter trendline break, because we are at the upper band. Wait for the counter trendline break. Wait for the market to make 2 lower lows, lower highs, right? Not like this. Lower high, lower low, lower high but higher low. Not like this. Wait for the market. Don't go short yet. Wait for the market, as Miguel asked. Wait for the market to break the uptrend line and wait for the market to show you 2 lower highs, 2 lower lows. Okay? We don't know what is going to happen. Maybe the candle is going to close bullish. Maybe the candle is going to close bearish. But right now the bulls and the bears are fighting for control. And technically speaking, we are at the upper band, right? So what is going to be the next direction? Short. Maybe not today, maybe tomorrow. And before this, remember everybody, before you take any trade on NZD on Friday, we have another news announcement from Canada. So if you're a beginner trader, stay out, don't trade Canadian pairs, okay? Because just maybe, if this candle closes bearish, some of you are going to short the market, and maybe even the market is going to break the uptrend line, but because of Friday, the market can again shoot up and stop you out, right? So news announcements represent risk to the beginner trader, okay? So stay out of NZD CAD pairs. And of course comes the question, Passion, what if the market makes lower low, lower high 2 times? Can I trade on Friday? No. I mean, not no, I cannot tell you if you can or you cannot, but this is what I'm trying to explain to you. Even though you have a uptrend line break and you have 2 lows and 2 highs, right? And you want to short the market because you have bearish candlestick formations, because of the news announcement, the market can shoot up and stop you out. And we keep repeating you, if you lose on a trade and you didn't know why, it's okay. But if you lose on a trade and your loss was predictable, then it's not okay, everybody. If you know that Friday is coming and you have a news announcement coming out from Canada and you are trading, right, and you lost on the trade, it's not okay, because your loss was predictable. Oh, but I could win. Yes, you could, but you don't have the crystal ball. Professional traders manage risk first. Professional traders address risk first. They don't chase the money. They don't chase the market. They don't chase the pips. Professional traders are out. Okay, they are not entering. Maybe they news trade at the exact time, but they are not entering long or short positions. Okay, yeah, alright, position trade is something different. DJ Pence, hello, Australian GDP news was amazing for traders, of course. Yes, it was. Yes, it was. Okay, everybody, see you back tomorrow. Our time is up. Miguel, give me 10 minutes and then we're going to meet on Skype, okay? Our time is up. Stay strong, everybody. Stay strong. Obey the rules. Maybe this candle is going to close bearish. Stay strong and obey the rules. And trade with passion. Okay, everybody. This is FXPassion signing off.